Imagine stepping into the world of investing where every decision you make can lead to exciting possibilities. In this world, two popular options are like paths that investors can take: exchange-traded funds, ETFs, and mutual funds. While they might seem similar at first glance, they have special traits that make them unique, just like superheroes with different powers. First, let's talk about ETFs, known for being a more affordable option for many investors. Why? Because they have what's called lower fees. Think of it like choosing between two candy stores. If one store charges less for the same amount of candy, you'd have more candy left in your pocket, right? That's what makes ETFs a popular choice. They can keep more of your money while you invest it. That's because typically they run based on a set of rules or an index and don't have to pay a portfolio manager millions of dollars to choose what to invest in. But that's not all. ETFs are also great at helping you save on taxes. They have a special way of handling the buying and selling of their parts, like stocks, that makes sure you don't end up owing a lot of money in taxes. It's like shopping smart and not having to pay extra charges. This tax edge in ETFs can add up big over the years through their creation and redemption process to avoid those annual capital gains taxes that you can often get from mutual funds and taxable accounts. Now here's the cool part. ETFs are like video games that you can play anytime between the opening and closing bells of the stock market. They allow you to make moves all day long, just like trading baseball cards with friends. You can decide when to trade, set rules for trading, or even make protective moves. This is perfect for people who like to react quickly to what's happening in the market. This is different than mutual funds, who only execute trades once a day at market close, or 4 p.m. Eastern. Want to hear about another superpower of ETFs? They let you spread your investment over a bunch of areas, kind of like planting different types of seeds in the garden. By growing a variety of plants, you won't be in any trouble if one doesn't do well. This is called diversification, and it helps protect your money from big losses. Mutual funds offer this feature as well, so it's not only to a benefit ETFs, it can be a benefit to both ETFs and mutual funds. As we're halfway through this discussion, don't forget to smash that like button if you're enjoying this video. Thanks a million. Now, let's flip the page and look at mutual funds. These funds are like having a coach who helps you play the investment game. They come with experts who make all the tough decisions about where to invest and try to score big wins. It's for those who prefer having someone experienced in charge, especially if you're busy with other things like school or hobbies. This is called active management, or minds over money, when a professional manager is overseeing all the investment decisions on the mutual fund portfolio. One thing kids and adults alike love about mutual funds is that they can work on autopilot. Imagine setting up a piggy bank so that it automatically adds money from your allowance. That's how these funds can help you. They can regularly move money into your investment without you having to remember to do it. Having a regular dollar cost average program into mutual funds is a good idea to get that compounding working for you over longer periods of time. Mutual funds offer helping hands, like services that take care of tricky parts for you, and unlike ETFs, they don't make you buy a whole share at once. So if you have a certain amount of money, you can invest it all down to the last penny without worrying about the price of a full share. Basically, mutual funds can trade in as little as $1, but ETFs normally require you to buy at least one share, which can range from $10 to several $100. As we reach the most exciting part of our story, we see that choosing between ETFs and mutual funds is like choosing between different adventures. Each path has its thrills and challenges, and the best one depends on what kind of journey you're looking for. Let us know your comments on what you think is a better method of investing. Remember, this is not financial advice. Wythdrawl Investing Insights signing off.